One man read the loan documents Wall Street never bothered to open. He was a doctor with one glass eye and no Wall Street training. In 2005, he saw a disaster the whole world could not. Then he bet his entire fund against the American housing market. Almost every client he had wanted to sue him for it. 2 years later, that one bet made him a fortune. And the lesson he left cost you nothing to copy. His name is Michael Burry, and he managed a small fund. He ran a tiny firm in California called Scion Capital. Before this, he was a medical resident pulling brutal hours. He studied companies at night when the ward finally went silent. He posted his stock ideas online under his own real name. Strangers with real money read his work and trusted it, so they handed him their savings to invest on their behalf. Now hold one number in your mind for the whole story. By 2005, Americans owed trillions of dollars on their homes. Much of that debt was packaged and sold to investors. These packages were called mortgage-backed securities. Banks swore these bundles were as safe as government bonds. Ratings agencies stamped them with the highest possible grade. The whole market simply believed the stamp and moved on. Pension funds and banks bought these bundles by the billions. Nobody questioned what the bundles were actually made of. Picture the comfort of trusting an expert without checking. That comfort is exactly where the danger was hiding. Burry refused to trust the stamp, and here is what he did. He ordered the actual loan documents inside the bundles. Nobody on Wall Street had ever read them line by line. Burry read hundreds of them, one painful page at a time, and the pages told a story the ratings hid completely. Many borrowers had no income written on their forms at all. Some loans required no down payment and no proof of a job. Teaser rates started low, then jumped after 2 short years. When the rates jumped, these borrowers could never pay. Brokers had approved anyone who could fog a mirror. The risky loans were hidden by mixing them with safe ones. The safe bundles were stuffed with loans built to fail. Feel the quiet dread of seeing what everyone else missed. Burry was certain the housing bubble would burst soon, but being right was not the same as making any money. There was no simple way to bet against home loans. You could not just sell a mortgage bundle short, so Burry went to the banks with a strange request. He asked them to build a brand new kind of insurance. It was called a credit default swap, and few used it then. A credit default swap is simply insurance on a debt. You pay a small premium every single month. If the debt collapses, the insurer pays you a fortune. The banks happily sold him this insurance on the bundles. They thought the bundles were safe, so the bet looked free. They were taking the other side of his careful research. Burry spent over $1 billion on these swaps. Every month, those premiums drained his fund a little more. Now imagine the pressure building inside that small office. His investors saw the housing market still rising fast. They saw their money bleeding out month after month. To them, Burry looked like a man losing his mind. The phones rang with furious clients demanding answers. They screamed that he was gambling away their savings. Some threatened lawsuits to claw their money back. Feel the loneliness of being right while everyone shouts wrong. Most managers would have folded under that pressure. Burry did something almost no manager ever dares to do. He froze the fund so clients could not pull their cash out. He was so sure of his reading that he trapped their money. It was a brutal, lonely act of pure conviction. He had read the primary source, and they had read the stamp. That difference was worth more than every angry phone call. Now watch the ground begin to shift beneath the market. In 2007, those teaser rates finally jumped as written. Across the country, families could no longer pay their loans. Picture a quiet street filling with for sale signs, then another street, then a whole region, then the nation. The safe bundles started to rot from the inside out. The ratings agencies were forced to admit the truth. The highest grade bundles were suddenly worth almost nothing, and Burry's insurance contracts exploded in value overnight. The same banks that mocked him now owed him a fortune. Scion Capital posted a gain of nearly 500%. His clients, the ones who stayed, became far richer. The man they called crazy had been simply, quietly correct. Let that land before we turn it into your own tool. Now take the method, not the headline, into your life. Lesson 1, always read the primary source yourself. Burry did not trust the summary or the rating stamp. He went straight to the raw loan documents underneath. In investing, the primary source is the annual report. It is the filing a company sends to its regulators. Read the footnotes, the debts, and the cash flow yourself. Do not buy a stock from a headline or a hot tip. The crowd reads the summary, so the edge is in the source. Lesson 2. Be willing to stand against the entire crowd. Burry was alone, mocked and threatened for 2 long years. But conviction without homework is just stubborn pride. His courage came from the documents, not from his ego. Independent thinking means you check, then you commit. If your reasons are facts, the crowd's noise cannot move you. If your reasons are just a feeling, fear will break you. Lesson 3. Insist on knowing exactly how you lose. Before the bet, Burry knew his worst case completely. His most he could lose was the premiums he paid in. His gain, if he was right, was many times larger. Small known loss against a huge possible gain is the prize. Most gamblers risk everything to win only a little. The careful investor does the exact opposite of that. Risk a little to maybe win a lot, never the reverse. This single idea separates investors from gamblers. Now picture the family that ignored every one of these rules. They bought a house on a loan they could not truly afford. They trusted the broker who swore the rate would stay low. They never read the contract that doubled their payment. When the rate jumped, they lost the home and the savings. That is the cost of trusting a stamp you never checked. Loss aversion is the strongest force in your whole portfolio. The pain of losing money is real and it is permanent. Burry's whole edge was simply refusing to lose blindly. He knew the downside cold before he ever hoped for the upside. Now weave the 3 lessons into one steady habit. Read the real document, not the convenient summary. Form your own view, then hold it against the crowd. Know your worst case before you risk a single dollar. These are not tricks for geniuses with secret talent. Burry was a doctor who simply chose to do the reading. The work was boring, lonely, and available to anyone. He had no inside tip and no secret algorithm. He only had patience and the willingness to read. That is the strange secret hidden inside this story. The edge was not genius. The edge was effort and nerve. Wall Street had every resource and still chose not to look. One careful reader beat the smartest rooms in the world because the smartest rooms trusted a stamp they never tested. Now picture your next investment as a sealed bundle. Will you trust the label or will you open it yourself? Open it. Read what is actually inside the wrapping. Count the real risks before you count any reward. And stand by what you find, even when you stand alone. Burry later closed his fund and stepped quietly away. He had proved his point and had no need to gloat. The fortune was real, but the method outlived the money. A fund can close. A habit of reading can compound forever. Markets will boom and crash again, exactly as before. New safe-sounding bundles will be sold with shining stamps. Crowds will trust the stamp and stop reading once more. And somewhere one quiet reader will open the file. That reader can be you for the price of attention. Do not fear standing apart when your facts are sound. Do not pay for a bundle you have never once opened. The one-eyed doctor saw clearly because he chose to look. He read the loans. He thought alone. He knew his loss. That is the whole game, and now it is yours to play. If this was useful, the next lesson covers margin of safety. Subscribe and keep the principles compounding with you.